Hey everybody, it is Mark Coe for 2nd of January. Happy New Year. Welcoming 2018. First kind of full day back to markets here. And not a very exciting day, but I did want to point out a few levels that are of some interest here. So Euro dollar, I have Euro dollar up here, and this was really nice run at the end of the year. The daily model I use caught this move long in the euro and took profit on the last day of last year. Took profit just above one spot 20, so I took profit at 2010. And so the daily model got us flat, but I wanted to show you this level and why this level is so important. This level contained the buying in early September. This level drove price back down to 1554 in November, and now we're back testing it once again, back testing this level. On a bigger picture scale, this whole little section above 120 is also kind of interesting because as I go back to a longer look, so this will take us back to the early 2000s, you see what develops here. Again, this is all above 120 to 121. This is all this support that held through 2010, 2012, and was finally broken in 2014 and 2015. Now, this is the first test back to that section, right? This is that first test back, and that's why it's so key. Why it should be a bit of a challenge for Euro to really get through the top side of that. So understand, it's not one tick, it's a couple big figure zone that you're keying on there. But it is interesting to watch this dollar weakness at the beginning of the year. It started in December. We've seen Aussie strengthen, we've seen Euro strengthen, we've seen Pound strengthen, we've seen Yen strengthen. But Euro is at a pretty key little level here, just above 120, and you see what I'm referring to. Dollar Yen has held quite well in the sense that 112 is not really given way yet. Dollar Yen is not really given way here on the 112, and if you just get into a little bit tighter look here, I'll take it down to a daily on Dollar Yen. You see the 112 still holding, and that is held since November. So Dollar Yen has actually performed quite well. So I always look at it like the beginning of the year. If you're going to see decent trends, you'll oftentimes see some moves start to develop early on. You see managers starting to get positioned. It has been a fairly quiet in terms of volatility in recent months. 2017 was not the most volatile year we've seen, and it was by all means fairly calm. I would not necessarily expect to see that continue indefinitely. I still think you're more likely than not to see some bouts of volatility and understand how you want to be positioned when you do see that. Dollar Yen obviously is a recipient of some of that movement when we do have increased volatility. But as we come into 2018, we kind of start out the same way we left off last year, which is S&P very well bid, still under 2,700. And we actually have a new model short from Tuesday, the 2nd of January. So we'll see how that S&P develops. But I did want to mention tomorrow I'm doing a webinar, middle of the day. So check your email for details. But I hope you guys come join us, and we'll be presenting tomorrow on Wednesday, 3rd of January. So as markets pick up and over the next several days, often the very first few days of January can still be somewhat slow, but you would expect kind of a more normal activity toward the end of the week. And as you get into next week, we will keep monitoring. As I said, we're now running a pretty active four-hour model, so we're pretty active in the markets now, and hopefully that continues in through the beginning of January, and everybody off to a great 2018. So for 2nd of January, it is Mark Coe, and I look forward to talking to you guys all soon. Cheers.